Welcome to our latest video where we delve into the world of finance and investment, specifically focusing on dividend stocks. Dividend stocks have always been a hot topic among investors, and for a good reason. They not only provide a steady stream of income, but also offer a safety net in volatile markets. But with thousands of dividend stocks out there, which ones should you invest in? That's what we're here to discuss in the
people of my generation.
Yeah, well, I've got a grandson fairly close to your age, and he probably would go for a younger woman anyway. So that, I will mention him to you. Mention you to him. No, if you're interested in financial matters, you've got to have something to work with. I mean, I was fortunate in that respect because my dad paid for my education. If he hadn't, I probably wouldn't have become educated if I had to pay for myself. But so I was able to save $10,000 by the time I was 21, and that was a huge.
In this video, we will unveil 6 dividend stocks that stand out from the crowd, offering promising returns and stability. These are the hidden gems in the vast financial market that could potentially boost your portfolio. Stay tuned as we unravel these stocks one by one, diving deep into their performance, dividends history, and future prospects. When choosing dividend stocks, there are several key factors to consider. One critical factor is the dividend yield, which shows the annual dividend payment as a percentage of the stock's price. A higher yield could mean a better return, but it might also indicate a risky investment. The company's financial health is another essential consideration. A company with strong financials is more likely to consistently pay an increased dividend.
The answer is I do believe in dividends in a great many situations, including many of the ones companies in which we own stock. The test about whether to pay dividends is whether you can
look at factors like growth revenue, profit margins, and debt levels. Consistency in paying dividends is another crucial element. Companies with a history of regular dividend payments are often more reliable. Remember, each of these factors plays a role in determining whether a particular dividend stock is a good fit for your investment portfolio. 1. Johnson & Johnson. Johnson & Johnson, J&J, is a multinational company primarily operating in 3 sectors: consumer health products, pharmaceuticals, and medical devices. The company's business model is designed to provide innovative products that advance health and well-being. Its approach involves complete control over the biopharmaceutical model's research, development, and production. While specific financial data is not provided in the context, it is recommended to assess the company's financial health by looking at its revenue growth, profit margins, debt levels, and other financial metrics. The dividend yield and history for Johnson & Johnson were not provided in the context. Investors should review these details to understand the potential return on investment and the consistency of dividend payments. With its diversified operations in stable and essential industries like healthcare and consumer goods, Johnson & Johnson has demonstrated resilience and adaptability. Its commitment to innovation and comprehensive control over its product development process suggests a strong potential for sustained growth. These factors, coupled with an evaluation of its financial health and dividend performance, may make it a good long-term hold for many investors. 2. Procter & Gamble. Procter & Gamble, P&G, is an American multinational consumer goods corporation that has been around since 1837. The company started as a soap and candle company and is now one of the largest consumer goods companies globally, offering a broad range of products across various segments, including beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. While specific financial data is not provided in this context, investors should always review the company's financial health by examining its revenue growth, profit margins, and debt levels. The dividend yield and history for Procter & Gamble were not provided in this context. Investors should review these details to understand the potential return on investment and the consistency of dividend payments. P&G's wide array of household name brands, its global presence, and its focus on innovation make it a potentially strong contender for long-term investment. Its long history and ability to adapt to market changes suggest resilience, making it a potentially stable choice for investors looking for consistent returns. 3. Coca-Cola. Coca-Cola, NYSEKO, is one of the most globally recognized brands, known primarily for its namesake beverage.
I mean, Coca-Cola's been around since 1886. There's 1.8 billion 8-ounce servings of Coca-Cola products sold every day. Now, if you take 1 penny and get 1 penny extra, that's $18 million a day. And 18 million times 365 is 7 billion, 3 less 730 billion, or $6,570,000,000. So annually, $6,570,000,000 from 1 penny. Do you think Coca-Cola is worth a penny more than, Joe's Cola? I think so. So,
The company operates a franchise distribution system dating from 1889, where the Coca-Cola Company only produces syrup concentrate, which is then sold to various bottlers throughout the world who hold exclusive territories. While specific financial data is not provided in this context, it's crucial to examine the company's revenue growth, profit margins, and debt levels to assess its financial health. Coca-Cola has a decades-long streak of dividend increases, making it one of today's most enduring dividend stocks. However, the exact yield was not provided in the context. Reviewing these details will help investors understand the potential return on investment and the consistency of dividend payments. Coca-Cola's iconic brand, global presence, and consistent dividend history make it a potentially strong long-term hold. Its ability to maintain a leading position in the beverage industry despite changing consumer trends suggests resilience and adaptability, key factors for long-term investment considerations. 4. McDonald's. McDonald's is one of the world's leading fast food chains with more than 39,000 locations in over 100 countries.
If I had to do it again, I'd go work for McDonald's. And the reason I go work for McDonald's, whether it's $7 an hour or 15, I don't really care. I don't really like McDonald's food, but they have the best business systems in the world. How else can a company take virtually non-college educated people and build a fast food industry across the world? And they have the best system. So right inside little McDonald's, you can learn everything you need to learn about business except for the management side of it. So I just go work at McDonald's so I can learn even more.
The company operates and franchises McDonald's restaurants as company-owned restaurants and franchised restaurants. Franchisees provide a significant portion of the company's revenue through rent, royalties, and initial fees paid upon the opening of a new restaurant. While specific financial data isn't provided here, the analysis of a company's financial health should include a review of its revenue growth, profit margins, and debt levels. The dividend yield and history for McDonald's were not provided in this context. Investors should review these details to understand the potential return on investment and the consistency of dividend payments. McDonald's, with its globally recognized brand, robust business model, and widespread presence, potentially makes it a good long-term hold. Its ability to adapt to changing consumer preferences and maintain consistent growth, even in challenging economic times, reflects its resilience, which is an important consideration for long-term investors. 5. AT&T. AT&T is an American multinational conglomerate holding company and one of the world's largest telecom operators. It provides a wide array of services, including wireless communications, local exchange services, long-distance services, data broadband and internet services, video services, telecommunications equipment, managed networking, and wholesale services. While specific financial data isn't provided here, it's always crucial to examine the company's revenue growth, profit margins, and debt levels to assess its financial health. The dividend yield and history for AT&T were not provided in this context. Investors should review these details to understand the potential return on investment and the consistency of dividend payments. AT&T's extensive customer base, diverse service offerings, and substantial infrastructure make it a potentially strong long-term hold. Its ability to evolve with technological advancements and maintain a significant presence in the telecommunications industry suggests resilience and adaptability, making it a potentially stable choice for investors looking for long-term returns. 6. IBM. IBM, also known as Big Blue, is an American multinational technology corporation that has been a global technology innovator for over a century. The company leads advances in AI, automation, and hybrid cloud solutions that help businesses. It also partners with developers, data scientists, CTOs, and other creators to improve the world's operations. While specific financial data isn't provided here, it's crucial to examine IBM's revenue growth, profit margins, and debt levels to assess its financial health. The dividend yield and history for IBM were not provided in this context. Investors should review these details to understand the potential return on investment and the consistency of dividend payments. IBM's long-standing position as a technology innovator, coupled with its ongoing achievements in AI, automation, and hybrid cloud solutions, makes it a potentially strong long-term hold. Despite facing some challenges, such as a recent data breach, IBM continues to push technological boundaries, which could lead to future growth. We've explored 6 diverse dividend stocks in this discussion. Procter & Gamble, Coca-Cola, Johnson & Johnson, McDonald's, AT&T, and IBM. Each of these companies has a unique standing in their respective industries and offers potential long-term growth and consistent income. Procter & Gamble and Coca-Cola have proven their resilience in the consumer goods sector, while Johnson & Johnson continues to be a powerhouse in the healthcare industry. McDonald's has maintained its stronghold in the fast food sector, and AT&T and IBM remain significant players in the telecommunications and technology industries, respectively. The inclusion of these stocks in your portfolio could potentially provide a balance of stability and growth. They offer the prospect of regular dividend income and potential capital appreciation over the long term. However, it's essential to remember that investing always carries risks. Make sure to do thorough research and consider your financial situation and risk tolerance before making any investment decisions. If you found this video helpful, please give it a like and share it with others who might benefit from this information. Your support helps us continue to bring you more content like this. Don't forget to subscribe to our channel for more investment tips and advice. To ensure you never miss an update, click the notification bell to receive alerts on our latest videos.